Gold is rising. But this isn't just another market rally. This is a signal. Because when gold moves like this, it isn't just reacting to numbers on a screen. It's responding to silent tremors in the world's economic foundations. And as it climbs past $2,400 per ounce, the whispers grow louder. Should you buy now? Or wait? That's not just a question. It's a fork in the road. Let's dig into what most people overlook, and why those who wait might be walking away from something far bigger than just a price point. It starts with the world behind the curtain, where governments and billionaires make moves quietly without ever posting it on social media. Did you know that in the last 36 months, central banks have purchased more gold than any other time in modern history? They're not guessing. Countries like China, Russia, Turkey, and India are stockpiling, not for trade, not for prestige, but as insurance against a world they no longer trust. You see, gold isn't just a shiny rock. It's the oldest financial language in the world. And right now, that language is being spoken louder than ever by the biggest players on the planet. But ask yourself, why now? Why are they racing to lock in gold while retail investors are still hesitating? It's because they know what most don't. The financial system is fragile. The debt is historic. The trust, collapsing. Gold is their lifeboat. But is it yours? Let's connect the dots. Official inflation reports, they look tame. But reality tells a different story. Every time you fill up your tank or check out at the store, you feel it. That hidden inflation governments don't want to admit. And in times of inflation, gold doesn't just survive, it thrives. It has no CEO, no debt, no quarterly earnings. It doesn't default, and it doesn't go bankrupt. In a world of economic chaos, gold becomes a safe haven. But here's the twist. This run isn't being driven by panic. Not yet. It's being driven by preparation. Big investors are positioning themselves now, before the herd arrives. Right now, we are in the stealth phase. That calm, quiet accumulation zone where those in the know are already loading up. Because once the public rushes in, the price will already be gone. And there's another layer to all this: mining data. Gold mines today are not producing like they used to. In fact, global gold discovery has declined for a decade. Mines are getting deeper, more expensive, and more politically unstable. It now costs more than $1,400 just to produce a single ounce in many regions. So when gold drops to $1,900 or $2,000, smart investors buy, not because they're guessing, but because they understand the math. If the production cost is rising, the price must follow. Now add another layer: gold in technology. Gold isn't just jewelry anymore. It's in AI servers, smart chips, spacecraft, and renewable energy systems. Demand from the tech sector is about to explode. And when that happens, gold won't just be a safe haven, it'll be a required resource. That means scarcity, and scarcity drives price. Still think it's too late? You're not late. You're early. If you act before the world wakes up. Because the next price jump won't be gentle. Here's where it gets interesting. Many investors are waiting for the right time to buy. But gold doesn't reward those who wait for comfort. It rewards those who act before the news cycle catches up. You don't need to buy a fortune's worth, you just need to position. Because missing the next surge might cost more than any short-term dip ever will. And now, let's go even deeper into the numbers, the forecasts, and the psychological traps investors are falling into today. Let's open that vault. Look at the last 3 gold surges. 2008, financial collapse. Gold soared. 2020, pandemic panic. Gold soared again. 2024, geopolitical fractures and silent bank failures. And gold surging once more. Now here's the pattern most never see. Each surge follows loss of trust. Trust in banks, trust in governments, trust in fiat money, and when trust dies, gold rises. Right now, we're seeing a multi-decade distrust cycle unfolding. Debt levels are unsustainable, currencies are unstable, and gold is quietly becoming the fallback plan for the global elite. But how high can it go? Some analysts project $3,000 per ounce by next year. Others whisper $5,000 in the case of currency devaluation or systemic collapse. Too far-fetched. It's not just theory. The math backs it up. Gold hasn't even caught up with inflation-adjusted highs from the 1980s. If it did, we'd already be at $3,700 today. The rise hasn't even begun. But what's stopping people? Next, what type of gold? Physical bars or coins? Best for long-term preservation. Safe, tangible, but slower to move. ETFs. Easy to trade, quick access, but not truly in your control. Gold mining stocks. High risk, high return. They often surge faster than gold, but also fall harder. Then you've got digital gold, tokenized assets, backed by physical reserves. A new frontier for gold investors. Each path has pros and cons, but doing nothing? That has only downside. Now let's talk timing. If you wait until gold is at $3,000, have you really played it safe? Or have you just paid more? Because here's what happens. Gold moves slowly, until it doesn't. It sleeps for months. Then, in a span of weeks, it breaks all-time highs. By the time the media catches on, you're too late. Think of this moment as pre-hype gold. Right now, gold is undervalued compared to debt levels, inflation, and global instability. But that window is narrowing, because public perception is shifting. Fast. More people are waking up. More investors are rethinking trust. And when gold starts trending on every feed, it's already too expensive. The advantage is now. Still uncertain? You're not alone. But here's a truth. Every seasoned investor learns the hard way. You don't make money when you buy what's popular. You make money when you buy what's necessary, before it's obvious. And gold? It's becoming necessary. In finance, in technology, in politics, in survival. The world is changing. Quietly, permanently. And gold is once again at the center of the storm. Now that the price is climbing and the world is watching, the noise begins. But gold doesn't care about headlines. It cares about pressure. Macroeconomic pressure, supply pressure, political pressure, currency pressure. And in the last 6 months, all four have aligned. In the world's largest economies, debt-to-GDP ratios are no longer just unsustainable. They're breaking historical records. The US crossed 130%. Japan is at 260%. Europe is fractured between nations who print and nations who protest. And while fiat currencies inflate themselves into fragility, gold becomes the currency that says nothing and waits. But this isn't just about collapse. It's about migration. A global migration of value. From digital illusions back to tangible foundations. And while the public chases fast profits in unstable markets, the smart money is quietly parking itself in gold. Why? Because when trust exits the financial system, gold becomes the vault of last resort. This wave isn't emotional, it's strategic. What we're seeing is a structural repositioning of wealth by those who no longer trust tomorrow's monetary policies. And it's not just banks and governments. Private wealth managers, institutional funds, multifamily offices, they're all threading gold into portfolios, not as an accessory, but as an anchor. Not for a year, for a generation. Because this isn't a spike, it's a shift. And if you're only watching charts, you're missing the architecture behind the price. Let's go inside that architecture. Gold is no longer just a hedge. It's becoming a primary reserve. Not in vaults, but in blockchains, data centers, emerging markets, and de-dollarizing economies. Some African nations are moving to settle trade in gold. Middle Eastern nations are linking gold to energy deals. Asian countries are launching gold-backed currency trials. And so, as the global economy trembles under the weight of inflation, uncertainty, and digital disruption, gold gleams not just as a metal, but as a statement of wealth, a statement of wisdom, a timeless signal in a noisy, volatile world. You've now seen the forces at play: central banks racing to secure their reserves, retail investors fueling demand surges, emerging nations shifting the power dynamic, and markets responding like never before. But here's the final truth. Gold isn't just reacting, it's warning us. Now the question remains, what will you do with this moment? Will you wait for clarity, knowing the markets rarely whisper twice? Or will you act, recognizing that the window of opportunity often closes silently? History favors the informed, wealth favors the bold, and time waits for no one. This is EG's Pro, guiding you through the golden maze. If you found value in this insight, don't forget to subscribe, because we're not just tracking the trends, we're revealing what lies behind them. Until next time, dig deep, invest smart, and stay gold.